Hello, everyone. Welcome to my webinar. And today we are talking about the year-end tax planning. And today I only emphasize with part one is the value extraction. And this part will focus on the directors and shareholders, how they can get more benefit from the company and how they can get more tax-free withdrawal from the company. So this is the part two for the next week will be focused on more tax relief and tax planning tips. So let's see today's topics. The first one, I'm gonna tell you more about the allowances you could use for this tax year. So after today's session, you can come back and check your business if you have already used all of the allowance I listed today. And later on, I will talk something about the expenses, which I think is the most effective way to help you save more personal tax and personal income tax, and which can also help you at the same time save some company tax as well. And the next one will be direct loan and some examples about the loan funds to the company and the tax-free amount you could use. And the other part will be some other options, for example, how you could use the company cars, about the pensions, and why it is important about the alphabet shares. So yeah, let's go through about all these topics one by one. The first is allowance. So this is the sum of the common allowance you should aware. The first one, the topic, of course, is the personal allowance. When you decided how much, as a doctor, how much you should give yourself a salary, and there are some numbers you could use to consider about, especially if you're a small startup and it is not have no certain salary amount inquiries. For example, you're not and you could use some of the amount I list in here. The first is the 12,570. What is special with this number is this the total amount of your personal allowance, means that with this number you can get your salary tax free. But I would like to highlight in here that even though you withdraw 12,570 as your salary from the company this year, you still entitled with the national insurance. If you say that I'd rather not to pay the personal income tax, nor I would like to pay any national insurance contribution, and this amount 9,568 will be more suitable for you. Because, or you say that you have some family members you could involve into your business and help you withdraw more money from the company, but you do not want to charged by the national insurance, or you want to use up their personal allowance, and you do not want them to pay any personal tax. So 9,568 will be the amount you are looking for. With this amount, there's no employee NI liability or any class one NI contribution, and the a good combination. Of course, you might say that what if I want more income to support my family and the daily life? You could combine the dividend and this 9,568. Yeah, it's a very good combination to help you save a lot of tax. The next one will be the employment national insurance contribution allowance, which means that any employer NI up to 4,000 will be exempt from the charge. The third one is the starting rate for savings, and mm, it means that if you have any investment income, for example, saving income, if, for example, you lend money to your company and your company pay your interest income. Up to 5,000, it will be tax free. It will be zero tax rated in with this amount. And next one is a personal saving allowance. It's a kind of allowance, means that up to 1,000, it will be no tax. It will be no tax charge. But this amount is for the basic tax, basic rate taxpayer. If you are higher rate taxpayer, it will reduce to 500. And of course, if you're additional, there will be no allowance you can use. Some of the people think that they don't understand what is the difference between this starting rate for savings and personal saving allowance. You can say this 5,000 is zero rated and this 1,000 is allowance. It's kind of allowance, yeah. So that is a different. I'll demonstrate those two in a later example to help you have a further understanding. And the next one is the dividend allowance up to 2,000. No matter if you are basic taxpayer or the higher rate taxpayer or additional taxpayer, this 2,000 allowance are always in there. So as long as you income tab is dividend, you entitle with 2,000 tax-free income from the dividend. And similarly, the property income allowance and the trading income allowance is a 1,000 for each year, similarly as above. No matter if you are a basic rate or higher rate or additional taxpayer, this 1,000 are still always in there. But there's one thing I would like to highlight in here. If you are entitled with rent a room relief, means that you have a lodger who live with you and you rent one room to your lodger, so you are entitled with 7,500. But this 1,000 allowance and the one room relief are conflict with each other. You can only choose one. So it is better for you to do some, self check and to make sure that you get the most amount for your tax relief. Marriage allowance. This is a very good benefit. If you have a partner or a spouse who is not really use of their personal allowance, they can transfer up to 2% of the personal allowance to you for you to use. This is a very, very good benefit if you have a spouse and your income is much more higher than the others. So you can use 10% of their personal allowance to help you to reduce more tax liability, personal tax liability. And capital gain tax annual allowance. And if you want to dispose some shares to your company, maybe you need to aware of a capital gain tax allowance. It means up to 12,300 it will be exempt from tax. This is including any asset or shares. But if you would like to dispose any asset to your company, for example, like a laptop or furniture, as long as those assets value is under 6,000, you're entitled with the chattel exemption. So you do not need to. You are not entitled with any capital gain tax with the disposal under the value of 6,000. So if you want to withdraw some money from your company, you can sell some stuffs to your company under 6,000, or otherwise 12,300 is exempt as well. Gift a donation. So if anyone looking to reduce their personal tax, you can think about the gift donation. One of the key benefits for gift a donation is, of course, it can increase your basic rate band by claiming back the gift allowance. And another key benefit for the gift donation is you can carry back to the previous years. Means that if you make the donation for this tax year and you pay more tax in last tax year, you want to reduce some tax from last year, you can do that. You can carry back to the previous year. Yeah. And similarly, another way to reduce your personal tax is to invest into the EIS or SEIS company, which actually somehow, if you meet a certain condition, your company can you can invest it into your company, and your company can apply for the SEIS or EIS to help you to reduce more tax liability. So how it works? If the company is apply with the SEIS is meaning for startups, the as long as once you invest into the company, the 50% will straight away will be a tax saving up to 50% of your from your tax liability. Similarly, with EIS, it has a slightly reduce of the tax relief percentage. It's only have 30%, but it is more focused on the established company rather than the startups. So that means that with a lower risk, you might get lower tax relief. That makes sense, right? So yeah, so you can use these two schemes to reduce your tax liability and invest money into your company. Otherwise, if you want to make your business more attractive in front of the investors or funders, again, you can apply. You can your company can apply those two schemes. It's really helps. And if you would like to talk more about the SEIS or EIS scheme application, you can talk to our teams. We can definitely help you to apply those two schemes.